You are listening to Mining Stock Education.
I think where my ego came in was thinking I had some kind of differentiated edge and not understanding that I didn't understand the basics. So I think maybe I fell in love with the management team. If I'm being honest, if this were a different management team with a different name on it, would I have put up with this for this long? I keep a stack of notebooks that's probably the length of my arm at this point. So I went through, looked at everything, I thought about it, and ultimately came to the conclusion to sell, and to sell first, and to be early and sell first.
It's Mining Stock Education, and I am your host, Bill Powers. And thinking through why you buy a stock and why you sell a stock, I can tell from observation of many years at this, can be a difficult task for investors. Well, my guest today is a returning guest, Sultan Ameerali. He is a very thoughtful investor. He knows why he buys and why he sold. And Sultan, you bought Minera Alamos some years ago, but you just sold it recently. You were very vocal about this stock on Twitter. And since there was a transformative event that kind of sparked the reason for your selling, I asked you to come on the show. Can we talk about why you sold? But before we do that, could you share with listeners why you bought the stock originally?
Yeah, that's a good place to start, Bill. Thanks again for having me on. I think the history of why I bought will probably make the sell decision make more sense. So I originally bought this stock in 2018. The company had been restructured, turned into a Mexican bootstrapping mining play. This is when I was first getting into the mining sector. So I did not have the confidence I had today to be picking single names. And so Minera Alamos originally was a small position, part of a basket of stocks that I picked that would give me exposure to gold mining, but in particular, bootstrap gold miners. There were a few of these into this basket. Minera Alamos, Mako Mining, a few others. As I became more comfortable with the sector and understanding what I was doing, I kind of dropped that basket approach. What I realized with that is it protected my downside, but if you're going to take risk on junior miners, it's hard to follow that many names, right? Because then you have a basket for gold, you have a basket for copper, you have a basket for whatever, name the other theme, and all of a sudden you're looking at a lot of names. And so over time, I realized I needed to slim that down, kind of drill down, understand what I was doing. So some other stocks were dropped or sold at a profit. Over time, I kept the Minera Alamos name. I did like the story. I was familiar with Mexico, and that might be part of why I held on perhaps too long, is because I understood the area well, having spent some time there. And so over time, bought and sold shares, and had held for about 7 years. And so that's how I ended up in the stock. Over time, as you know, the stock has almost been cursed. It's it was COVID, which impacted build times for everybody, but Minera Alamos or any of these mine builders in particular. There was also a drought in Mexico that affected recoveries. So there was that as well. So the Santana project, and then the last piece, which everybody I think is familiar with if they're watching your show, is the Mexican permitting issues that started with the election of AMLO.
For open pit mines in particular.
In open pit mines in particular. And this is Mexico-wide. That backlog is starting to break free, and you're starting to see that logjam kind of clear with Heliostar. So what did we get? We end up with Sultan owning a bunch of Minera Alamos at an average cost of 27 cents per share. The last purchase I made was probably late last year. I bought something called Sabre Gold Mines, which was being acquired by Minera Alamos. I was able to capture a spread about 15 to 20%. And so I was able to get these Minera Alamos shares at a bit of a discount.
And we're talking Canadian dollars, because I do have a lot of U.S. listeners as well.
Yes, we are talking. Yes, and that is in Canadian currency there, Canadian pesos. So that was the last large. Then that's the last dig I'll make at the Canadian dollar on the show. But that was the last major purchase I'd made of Minera Alamos shares. Drove down that price. My original buy in 2018 was actually closer to 20 cents, but that was a very small purchase as part of the basket. Over the years, I had bought more at higher prices. This had brought the price down. I thought 27 cents was a fair price, because when you factored in the acquisition of Copperstone, you were not paying much for that Mexican optionality. So I thought my downside was protected.
And can you elaborate on Copperstone for those that don't know the story?
Yeah. So Copperstone is the mine that Minera Alamos acquired late last year. They acquired it from Sabre Gold Mine. Sabre was functionally insolvent. Little did I know that Minera Alamos, a few months later would also be functionally insolvent. But, so they got a good deal on that. But it was an all-share deal, took the mine off the hands of Sabre. The Minera story was they were going to build this mine, validate their thesis and their business case of we can put small mines into production quickly, cheaply, profitably, and effectively, use that money to keep the company running while the Mexican permit showed up, and then eventually, restart off that bootstrap model. At the time, that was also a pivot. I was concerned. The more I understood Copperstone a little bit better than most, just because I own something called Star Royalties, which owned a stream on it. And so I thought it was a good deal. And that was a pivot. I understood the why because of the permits. So I added more to that position by buying Sabre and eventually having those convert into Minera Alamos shares. That leads me to a full position, which is where I was sitting up until last week, of about 8%. It had been higher than that, but other stocks had appreciated in value. So that position as a overall in my metals and mining portfolio drops down into the single digits. You get that permitting halo from Heliostar. Stock starts moving to 45. Sultan's starting to feel pretty good about himself. All right, we're rolling. We're good to go. My assumption, Bill, was that after the permitting happened, or as we got closer to that permitting halo, there would be a financing because they did need money to put. Can
you elaborate for those that aren't following? What do you mean when you say permitting halo? If you could just break that down a little more.
Yeah. So to be clear, Minera Alamos does not have any permits, any new permits for its Mexican operations. There's a small mine called Santana. So they're waiting on extra permits to maybe expand that operation. There's Serra de Oro, which is the prize. They're waiting on permits there to start building out an open pit mine. And then there's a smaller asset called Fortuna. For our purposes, what's considered that non-core. They're waiting on permits for all of those things. And so when Heliostar got their permit for an open pit mine in Mexico, I think it signaled to the market what I also believe was true, is that the permits were always going to come. It was just going to take a while, and they were going to come in the back half of the year. That opinion on my part was informed by conversations that I had at PDAC, not necessarily with people in the Mexican government, but people who were sort of close to the situation and people whose money was tied to Mexico. Not pundits or investors, but people whose jobs are tied to, I have to be in Mexico at this time because I will be working on an open pit project. So think contractors, security personnel, things like that. That's where that opinion came from. I had also had conversations with Minera Alamos around the Oramet financing deal that they had in place previously about the gold stream. I was left with the impression, based on those conversations, that they were in the process of putting together a financing package strictly for Copperstone. So with that background, I think we can probably talk about what happened last week. So the stock gets halted. I believe it was Wednesday or Thursday of last week. I was expecting it to be permitting news, that's what I would assumed it would have been. In retrospect, that was incorrect because Minera wouldn't know about their permits. So it turns out it's a transformational acquisition that I don't actually consider an acquisition. It's a restructuring of this company. So they acquire from the old Caliber Equinox. So out of that Caliber Equinox deal that happened a while ago, there are some non-core assets there, very small assets in Nevada. A producing mine called Pan. There is a development asset called Gold Rock, and then a third sort of exploration asset. Minera Alamos acquires these assets, but acquire is sort of a loaded term here. There's a lot of dilution involved. So in order to finance this, they do a huge stock offering with warrants attached. I did talk to the incoming chairman of Minera Alamos yesterday. These are institutional shareholders, and I totally understand that. But what they wanted in exchange for financing a junior and essentially extending a lifeline was a full warrant. So 35 cents or so, give or take a cent, Full
The
warrant
shares were trading at 48 cents prior to the announcement
prior
too.
to this, yes, and that's why the stock dropped 20% last week. It's a massive offering, so all of a sudden we are looking at more than 1 billion shares outstanding. So that offering was fully subscribed. So that's 380 million shares, 380 million warrants. That add that to the 570 million shares outstanding, you can see what that dilution looks like. So now I am faced with a decision of, what does this company look like today? What does the share structure look like today? What's changed for me from what I thought I had versus what do I have now? Am I better or worse off? And if I'm going to sell, do I sell now or do I wait? Because the selling could get worse or the sentiment could improve and it could get better. I sort of made a decision to sort of step away from my computer and look at my notes after that sort of broke away. So I didn't want to be influenced by Twitter, outside influences. I kind of wanted to go back and look at my what I had written down. And so whenever I invest in a stock, I kind of write down that thesis, whether sometimes it's publicly on Substack. Most of the time I keep a stack of notebooks that's probably the length of my arm at this point. So I went through, looked at everything I wrote down, and I thought about it, and ultimately came to the conclusion to sell, and to sell first, and to be early and sell first. And for me, it was a pivot too far. For me, it was a situation where when you have that many warrants outstanding, my experience is it puts a ceiling on the stock price. The other factor here was I had some familiarity with Pan and Gold Rock as a former investor in Fiore Gold, which was acquired by Caliber, which eventually sold itself to Equinox. My experience with those assets and people I talked to, and I talked to more than one person. I talked to about 3 different people, some with contacts in Nevada, some people directly working in Nevada. The consensus is the exploration potential at Pan is limited, and the mine is near the end of life. When I spoke to Minera Alamos management yesterday and their messaging, it was around optimizing operations to increase that throughput and get more ounces out of Pan. Now, this isn't exactly a management company with a lot of credibility at the moment. So I made the decision to sell because in my mind, if you're going to take this much dilution, then that has to be the last time. And you have to be able to use that cash. So this is the fulcrum asset now, Pan. They're relying on this cash flow to then either move forward Gold Rock or Copperstone. Now, if they can't do that, then they have to go back to the market again. And what happens to the stock price? And that just wasn't a risk I was willing to take. And to me, the pros, as they were explained to me, aren't pros around Minera Alamos specific factors. They're pros around there'll be a re-rating. I could buy any developer moving to a producer and get a re-rating. So what makes Minera Alamos special? Why am I going to take on that balance sheet risk? And for me, the answer was, I'm not going to take on the balance sheet risk. I'm going to sell, live to fight another day. I got lucky. And this is, I think, something else maybe we want to touch on, Bill. You got to buy well, because sometimes you make your money when you buy. If I had bought at a much higher price, I would be looking at a loss right now. And so technically, I made 25% on that. Now, that's 25% over a holding period of 7 years. Not great, but I didn't lose money either. And so I feel like I did a good job of protecting my downside. Where I didn't do a good job was evaluating management on its merits. I think maybe I fell in love with management. I think I kind of fell in love with my own thesis because I thought I knew more about Mexico than maybe, and now that Mexico at least became irrelevant.
And Sultan, what factor was ego? Because especially if you're on Twitter, and there's a lot of egos on Twitter, and then you become associated with your investment thesis. And I see people go from investor to functional investor relations, defending the thesis. So, like, what role did your ego play in this whole process?
I like to think that, because I pivoted pretty quickly, I think within hours of this transaction being announced. And I am always cognizant of that, because if you put tickers in your X bio or your Twitter bio, you're not going to make a trading equity. So you cannot associate your identity with an equity. You just can't, right? And because so many this is a perfect example. I thought I had one thing and then I had another. And so I will go out of my way to not associate my ego with any equity. And I hope if people take nothing out of this podcast, it's about a thought process and a way of thinking as opposed to being a type of investor or being an advocate for a certain stock. What I would say is where I think my ego maybe came in was around, I know that part of Mexico. I used to go there and I used to live there. So I know that that's better than this other part of Mexico. It never even occurred to me that that would be a non-factor in my ultimate decision to sell. It was a balance sheet problem, which is supposed to be my area of expertise. I should have caught that, right? So I think where my ego came in was thinking I had some kind of differentiated edge and not understanding that I didn't understand the basics. And to be honest, I think maybe I fell in love with the management team. This is and that's hard to say because I like to consider myself this sort of grizzled, heard every kind of lie from every kind of person, and and step away from it. But if I'm being honest, if this were a different management team with a different name on it, would I have put up with this for this long?
Do you think there's any truth to what I see all over the internet regarding this in terms of that they sold us out, they went after new money and didn't do right by their legacy shareholders? Do you agree with that critique I see out there?
I don't agree with that critique. And the reason being is this is a restructuring. Yes, they're rotating they don't care if I don't think personally they care whether the old shareholders stay. They have rotated from new shareholders to old shareholders. I don't think it's selling out implies that you're making a conscious decision out of malice. I don't think this was done out of malice. I think it was ultimately done because they didn't have a choice. And
because of the Mexico permitting situation?
Mexico permitting situation. And it sounds like they ran out of rope with their balance sheet. So my question to any retail holder who thinks they were sold out or sold a bill of goods was, what is your alternative? What financing package to get Copperstone into production would have been satisfactory? And, the warrant ultimately is the price that had to be paid to get large institutions that aren't going to sell the stock to finance. And to be honest, let's not call it a financing bill because a financing is 10 or 20% of the equity in a company. When you're taking this larger piece of the company, you're recapitalizing the company. Isn't
it like 41%, not including the warrants or something like that?
Yeah. So we're going today from 575 million shares. Now you're adding 380 million shares on that, right? So that's, 70, 80%, right? So that's a recapitalization in any, in a different, by a different name. That's not a financing. And so, the price to be paid for that was the warrant. And if that's what they felt like they needed to do to keep the company afloat, that's on me for missing it.
So you don't attribute malice to management, but do you not believe they have the reputational weight to do what needs to be done and operational skill to make this successful? Or they could have it, but you're not willing to bet on them at this point?
I'm not willing to bet on them at this point. So as it was explained to me, and so I put it to you this way, Bill, this is a gold bull market.
Opportunity cost.
Yeah, there's opportunity cost is real. That's the part that's really bothering me about this. I was in this stock for a long time. I could have bought GLD. What was the price of gold in 2018? What's the price of gold in 2025, right? That's my opportunity cost. And that's just in this sector. I could have, there's nothing limiting us to mining stocks here. I could have bought real estate. I could buy anything. And that's the other thing to realize. This is not a mining stock specific opportunity cost. This is the wide world out there. Capital is fungible. You can put it into anything you want. And it's important to understand that your benchmark shouldn't just necessarily be mining stocks. Your benchmark should be something like the S&P, the TSX composite, whatever your benchmark of choice, depending on where you live. And, for me, I think it's probably not, my benchmark isn't even a mining related, right? I would be some combination of the TSX venture or TSX composite just because I live in Canada and the NASDAQ. Right. If you kind of look at it that way. And so based on that benchmark, a 25% gain over 7 years is not good.
So when using that benchmark, did you ever question yourself over the years? Why am I still holding this?
Yeah. And so one of the things I've learned about mining stocks is they don't go up in a straight line. And so, and sometimes you get caught out like this because you could have a stock that does nothing for a long time and shoots up in year 4, parabolic, right? And so, as much as we'd all like to have bought it the day before it goes parabolic, that's not really the way it works. And so I tend to measure these investments as an IRR. And so what was my holding period? What was my return? What was my IRR? That's something I can compare against my index and see if I outperformed or underperformed it. And so in some cases, it's a special situation where maybe it's a takeover or something like that, or I'm clipping a free share or something like that. That's a very good IRR, short holding time. You can also get good holding IRRs if I don't think you or I own Philo at $2, but that IRR when it eventually got sold at 30. There was a long period where it didn't do anything before it got to that $2.
20 years. Even when I pull out the 10-year chart, I'm like, wow, it's like a flat line until it turns into a hockey stick.
Absolutely, right? And so when you look at things like that, then that's very common in the mining sector, right? And so it's a risk, but it's also that opportunity. So when people talk about the Lassonde curve, it's not the sine wave that it's always illustrated as in those graphics that you see. It's these long flat periods where maybe construction's going on or there's some drillings going on, that sort of thing. And then it's these sharp moves when the re-rate to production happens. It's a sharp move when the price of the commodity maybe moves in your favor, right? And so, I think when I look back at Minera, it was probably not understanding the situation on the balance sheet as well as I thought I did, or maybe trusting that, things that I knew, if just looking at it objectively, that I knew didn't add up, that I thought management who had the reputation of, would be able to work out a financing package, even though they were technically in default, things like that. And so that's why even now, with what's happening with this acquisition, which hasn't closed, by the way. So we're this doesn't close until September. So there's also a lot that could happen between now and then. If
even though it's a bought deal,
right? And what I mean by that is between now and then. And this is why I struggle with this. If a Mexican permit comes tomorrow or the day after, it could actually move to the upside, right? And maybe I sold too soon. And but that benefit of the permit coming is now, even though there's only this many shares and the bought deal doesn't happen until September, that news has to be factored through that lens of there's going to be a lot more shares coming in, right? So you're not going to get that 20%, 30% move. And I understand that Minera Alamos can't run their business based on me wanting leverage to a Mexican permitting situation. So I totally understand why they did the deal. I have to look at my best interests, which are, is this the best place to put my money right now? And upside catalyst would be Mexican permitting. Downside catalysts would be the warrant overhang and the possibility that Penn does not optimize the way they think. And so on an upside downside basis, what would have to happen in order to just burst through that warrant overhang in such a way that the warrants would be exercised? Because for the warrants to be exercised, this has to be a $750 million market cap company, if you think of it that way. What's going to happen to turn this into a $750 million market cap company, Canadian? And I just can't get there, at least not right away. And if I'm wrong, I'm happy to jump on later and catch the bulk of the move. What I'm not prepared to do is keep my capital right here, right now in a gold bull market. I just think there other opportunities will show up that I think are on a risk reward basis better for me.
Okay, so I love how you brought up the potential upside, the potential downsides. Now, when you consider your own profile as an investor, would you be one that would say, if I take care of my upside and identify successful upsides correctly, that takes care of my portfolio? Or are you one that would first say, if I take care of my risk or my downside, then my portfolio would be okay? Like, there's a different orientation.
Yeah.
Like, so I don't know if you listened to the episode with Rick Rule a month or so ago, but he talked about how Eric Sprott focuses on the upside, whereas Rick historically had focused on making sure his downside was taken care of.
Yeah, I think I'm probably more to the Rick Rule side, because I know how listening to his interviews, I think there's some similarities in what he does and what I do. He does it a lot better than I do in terms of identifying upside. But I think in terms of that balance sheet downside protection, I think him and I are coming at this from in the same way. Another way that I try to protect downside is through special situations. So an example is NGEX and NGAEX exploration. They're doing a royalty spin out. Their earnings yesterday were pretty good. The stock's moving. They announced that their spin-out's happening in September. So I bought some shares there. Price is moving. So from the time I bought it, it's $18.75 when I bought it. It's somewhere in the 20s now. I think $21. This is all Canadian, by the way. My plan is to get those royalty shares when they spin out, and most likely sell the stock. So those are royalties on long life assets that could run for 50 years. You're backed by the Lundins, and I sell the producing stock, and so I get my capital out, and I get these royalty shares that I'm essentially holding at zero cost. Why am I doing that? Let's look at tech with QB2, right? When you're building a mine at elevation, and in this case on an international border, cost overruns are real. These are things that can happen. Even the best operators can run into those issues. As the royalty holder, I get all the upside and without the downside that comes with it. We also have a track record of large cornerstone royalties being bought by one of the big three at large premiums, right? And so that's another way that I try to protect my downside, is by having these backstops in my portfolio that are zero cost. Another one that I know you and I have talked about in the past was the Kinross contingent value rights that I picked up as part of the Great Bear takeover. So I like those sorts of situations in mining where you can pick up free optionality, and those are a good way to protect your downside in your portfolio. Because
if you're more in the risk on a certain story and you still like the story, will you take risks at that point in the story's development, just knowing that you have that margin of safety between where you bought the stock and where it is now? Yeah,
if we're being honest, I kind of did that with Minera. I did lean in there when I thought people misunderstood the Copperstone acquisition. I leaned in there and I bought Sabre stock. So you're absolutely correct. I will lean in when
you took advantage of an arbitrage. I think 15%. See, so you're still playing your game though, right? There.
And isn't that the important thing though? Like, there are so many ways to win in this sector, and there's no sector like it. And you just really have to understand who you are. And over time, I do want to add different tools to the toolbox. I want to be able to mapping out drill results on software, really understand that piece of it. But right now, I consider myself a special situations mining investor and a value mining investor. It's been a while since I've been on the other side of a deal like this Minera Alamos. Usually I'm the person stepping in after everybody's upset. And I think that when we were talking about ego, that's probably part of what's bothering me deep down, right? Like, normally I'm the person who steps in after retail's upset and they're irate and they're selling the shares, and I'm the person who'll go take a look at it then. Because I suspect taking my ego out of it, if I was not a shareholder and this happened, I would definitely be cracking it open and taking a look and having that conversation with the new management team and deciding, do I want to own this company at 0.2 NAV?
Okay, so to have that degree of self-awareness and ability to reflect, like step outside yourself, look at yourself.
Yeah.
What feedback loops do you have that allows you to do that outside of yourself? Yeah.
So I have found, so recently I started writing on Substack more often, and it's less about the quality of the content, although I like to think the content is quality, but it's less about the quality of the content and more about having a real-time journal that's more long-form than Twitter. Whereas my Twitter tends to be more stream of consciousness, slightly offensive,
Less offensive, though. We talked about that last time, right?
Yeah, less offensive than it has been. Whereas I think having this sort of stream of consciousness, long form thing with Twitter is a bit different than what I was doing before, where I'll still keep a lot of notes in a notebook. But by putting them on Substack, it allows me to see how they kind of evolve over time, get some feedback from people. And so when we're talking about and also when I'm in a situation like this, before I would, and I think you know this about me, Bill, even this is not the first time a stock hasn't worked out. I generally will say that I sold it at a loss, or this happened, and go into some detail on the postmortem. I think what I'm trying to do with the Substack is put a bit more meat on that bone when I build out that investment case. And so in this case, when I sold it, same thing, try to put some meat on that bone. So then I have something to go back to when I make the next investment that may be similar. And I can look, what have I learned here that I'm going to apply to the next one? So I don't make the same. It's okay to make mistakes. What it's not good, you can't do is make the same mistake twice.
I like what you're doing too. I think you're viewing it with clear lenses.
Yeah.
What often happens is when you let your emotions take control, you attribute malice to the management team. And I specifically asked you, do you attribute malice? And you said no. Yeah. It's not worth it to me to risk to see if they can get the job done with my money at this point. So that's like an honest assessment without unnecessarily attributing malice to a management team.
Yeah. And sometimes it's not malice. It's an issue of competence. It's an issue of execution. It's an issue of circumstance, right? And so at the end of the day, Minera Alamos didn't work out. It doesn't matter, whether it was malice or whatever. It maybe matters the next time if the same management team comes back, and then I'll think about it more. But I think in that moment, you have to evaluate what you have and what you're getting and what's your risk reward. So the reward is you go from 0.2 NAV to 1.1 NAV. Okay, so that's understood. That's your potential upside. What's your downside? Penn doesn't get the job done and they have to come back to the market. Well, what's the NAV going to be then, right? I think that's all that matters, particularly in a situation where Jason Kosick is coming in as the new chairman with new shareholders. I just don't know how relevant it is at this point to go back to what Doug Ramshaw said a year ago.
Did you see it not being a retail darling anymore, the way it had been?
Yeah, although hope and copium are powerful drugs, and I'm very curious to see where this goes, right? There are other examples of this. Orico is a stock that I think you and I both know very well, a Mexican story. Copper mine. That's one I've never been bullish on. Now
I might like it more than you, though.
Yeah, and it would be impossible for you to like it less than I do, right? And so,
and you're vocal about why you don't like it.
Yeah, and I'm vocal about why I don't like it, right? And that's what makes the market, right? And
I've got to know the chairman. I think he's a very outstanding guy. So
yeah. And so. And to me, that's a situation where there's a river running through the deposit. There are other issues that I see, and again, that's a busted balance sheet. They're just doing these drip financings at $1 million, $1.5 million, and I just don't know what you can get done. And so you and I have a difference of opinion. Now, if they had come out and said, we're acquiring a producing asset to fund our work at Santo Tomas, and we're going to dilute shareholders by 80%, I'd be having a field day, right? Telling people like this is a disaster. This was going to happen, and I saw it the entire way. And so when you're taking shots at people, you also have to be willing to take shots coming back. And I screwed this up. This is on me. This is on nobody else but me. And But
did you screw it up though, Sultan? I guess I don't see how you made money on it. And were you faithful to your process? I guess that's where I'm at, because I separate the process from the results, because neither you or I can control a permitting result in Mexico. You didn't know that this acquisition was coming or restructuring, as you said, unless you were an insider. That's the only way you would have known, right? Or you knew somebody who knew something and you're functionally getting a rumor from an insider. But since you didn't have any of that, You dealt with the facts as they came to you, and you tried to remain consistent to your process. That's why I was asking you questions about your process as you're reflecting on it.
Yeah. And so I hope that I've been faithful to my process. I also hope that my process is going to evolve based on this. And if my process evolves over time, what I found over time is I'm making less mistakes that are catastrophic. And, and then that's a good thing. And then I think ultimately, if I can move closer to that Rick Rule ideal that you talked about, of protecting your downside and the upside takes care of itself, then I'm being true to myself as a shareholder of mining stocks and as an investor in mining stocks, because I'll never be Eric Sprott. I don't have the mindset of being an optimist and thinking everything's going to work out. And so, that spray and pray, I'm going to put it in everything and know that my upside is going to take care of itself. That's just not the way I'm wired. And to be honest, I don't have Eric Sprott level capital, so I have to be.
Which protects his lifestyle downside, right?
Yeah.
Because you're probably putting at risk a larger percentage of your net worth, right?
Yeah. Well, and also, like, Eric Sprott's no dummy, right? Like, they sold, I believe he sold Jarrett Canyon before that fell apart. I remember tracking Ely Gold Royalties, which was a tiny.
It was 7 cents, and I didn't buy it. Yeah.
Yeah. And he protected his downside by giving the company a share offering, but he also gave them a line of credit secured by the company's assets, right? So I don't follow every Eric Sprott deal. That would be all day, every day if I did, because he's in so many things. But, I don't think it's money with no strings attached. Like, there are times where he gets his warrants or he gets his piece of it, right? He's involved in the infamous Highcroft mine, and he got himself a pretty sweet deal there, and I doubt he's still involved. But so no, he may be spreading his money around, but I don't think he's a dummy either.
Yeah. Well, Sultan, we'll leave it there. Anything new at consolidatedrock.com that investors, listeners should know about?
Yeah, I have been trying to write more often on my Substack, so I try to get something out every Sunday morning is what I'm trying to do. And that's, it's not stock picks. It's not anything. It's just my thoughts on the things that I tend to follow. And if that's of interest to people, go read it, see what's there. If you're interested, then feel free to sign up. The other thing that I'm looking at through Consolidated Rock, which is my investment vehicle, is I'm really interested right now to special situations and things like that. Something that I bought recently that moved really well were these warrants in Gold Royalty, which is just, again, a stock that, if we're talking about flexibility of thinking, I hated, if we're being honest. And then
you're an Ameerali fan now?
I wouldn't say I couldn't call myself a fan, but I understand what's happening there. And again, facts change. I changed my mind, right? So I never want to be locked into a line of thinking. And so what I'm looking at as we move into the next phase of a gold bull market are mispriced derivatives, mispriced special situations, things where I can clip large upside in a short period of time, walk away, and then also have that bedrock of long-term investments, things like the Altius Minerals of the world, the Kennerlands of the world. So that's sort of where my thinking is these days, and this kind of thing I'm doing at Consolidated Rock. The other type of thing I'm doing is a lot more work trying to help mining company, put assets in different places, try to understand hidden assets, and do my own work to see if I can capture some value that might be hidden inside a mining company that they're not prepared to monetize, and maybe I can help do that.
You get into the deal side. It's the eventual progression. Once you get close to these things, you start looking at it, you talk to management, you see something they don't see, and then you're like, hey, what about this? Right?
Yeah. Absolutely. There's no sector like it, and that's good and it's bad, but I've definitely hooked on it. I've never had more fun as an investor, and as long as I can make a return and it's not costing me money to do it, I'll be here.
Yeah, excellent. Well, thank you for coming on the show today, Sultan.
Perfect. Thanks so much, Bill.
Thank you.